For 10 videos, I took every famous ICT setup, ran it 5 years deep, and proved the same thing every time. Order blocks, the golden pocket, the silver bullet. Coin flips. Every single one. So here's the comment I get on every video. Your backtests are wrong, I trade ICT and I am profitable. And you know what? You are right. Because this is my own real account, the one I actually trade, up $4,151 in 5 weeks. Apex prop, micro futures, fully disclosed. So either I have been lying to you for 10 videos, or I have been lying to myself. There is a third answer, the one thing every clip cuts out. And once I show you what it is, you will never trust a backtest the same way again. Let me show you exactly what this is before anyone calls it a flex, because it is not one. This is a prop account. Micro futures, the small contracts, NASDAQ and S&P. 5 weeks, May to June. 41 trades. And this is the equity curve. Every fill, nothing hidden. Up $4,151 gross. Call it $3,800 after commissions. 56% win rate. Profit factor of 2, meaning for every dollar I lost, I made 2 back. 19 of 24 days green. That is not Lambo money. It is small, real, and I can prove every dollar of it, which is more than most of the people selling you a strategy can say. Now here's the part that matters. If you have watched this channel, you should be confused right now. And good. I am the guy who ran the numbers. I will say it again. The fair value gap, as a mechanical rule, is a coin flip. The order block ties a random candle. I stand by all of it. So how is the same guy trading the same setups $4,000 green? This is the question every angry commenter throws at me. You are wrong. I trade FVGs and I am profitable. And the honest answer is, you might both be right. The backtest and the trader are not measuring the same thing. And once you see the difference, you cannot unsee it. So let me tell you the one thing I got wrong, because it is exactly one thing. I was right about the setups. The data is the data. The fair value gap as a rule is a coin flip, and I will defend that all day. What I was wrong about was where the edge lived. I kept testing the pattern. The edge was never in the pattern. Here is what a backtest actually does. It takes a setup, writes it as a fixed rule, and fires it 10,000 times the same way. No thinking allowed. That is the whole point. It removes the human. But the human was the edge. Watch. Here is the exact same fair value gap in 2 places. This one forms in the direction of the move, in the kill zone, after price took out the lows. I take it. This one forms against the trend, at no level, mid-morning chop. I skip it. Identical pattern, completely different trade. A backtest cannot tell them apart. It takes both, and it bleeds. I only take the first one, and that one choice is the entire difference. This is what ICT actually teaches, and not in a 5-minute clip. In the 2-hour lectures everyone skips. He even says it himself. The short versions do not work, because the part that makes it work is the reading, and reading takes hours to teach. So let me actually prove it, trade by trade, on the real charts. Here is the best one. June 11th, long the S&P off the morning gap, with the higher time frame pointing up. Entry here, stop here, and price runs clean into my target. $610, the read and the discipline agreeing. Here is a better lesson. May 21st, short, right after the structure broke down into the open. My written target was here, but price kept telling me to stay in, so I held, and I took $531, past my own plan. No backtest holds a trade past its target on a read. That is discretion making money. And because we publish losses on this channel, here is me wrong. June 11th again, another long off the same kind of gap, stopped out, down $382, my biggest loss of the whole run. Same playbook as the winner, completely different result. That is the game. But when I went back and reviewed all 41 trades the same way, something showed up that I could not see while I was trading. 21 of my 41 exits were by hand, not at a target. And my hands are a mixed bag. The good news, cutting losers early saved me almost $800. Bailing before the full stop on 4 of 5. That is the discretion working. The bad news, on my winners, the same itch to grab it cost me about $1,800. Money I left on the table, closing before my own targets. And I know it is a pattern because I write it on my own charts in real time. Here is one from last week. I closed the winner early and, in my own words, right there on the chart, I wrote, closed early, half, fear, do not like the price action. The very next day, same thing. I got out the second it tagged my daily target, and I left myself a note. Need to be more patient. Same trader, same leak, 2 days in a row. And both times, I only saw it after the fact. And this one, the only exit that was pure emotion. I bailed a short into strength and turned a manageable trade into my worst non-stop loss of the run. My gut made me money and quietly capped my own upside by about $1,800. And I genuinely could not feel it happening while it did. And here is the same discretion saving me, which is the part I am actually proud of. June 15th, I went on tilt. I shorted the same level 3 times into strength, took 3 stops back to back, and I was down about $770 on the day. Then I did the only thing that matters on a day like that. I stopped. I walked away, came back later, took 1 clean long, locked in $261, and closed the laptop, still red on the day, but with the bleeding stopped. No backtest ever decided to walk away. That one decision, the worst day not turning into a blown account, is the whole game. And it is exactly the thing I needed someone watching my trades to call out, because in the moment, I could not. Here is the uncomfortable part. The only reason I can show you any of this, the leak, the emotional exit, the pattern, is that I went back and reviewed every single trade after the fact. That is the thing almost nobody does, and it is the exact thing ICT drills in those long lectures. Review your own tape. Find your own tells. The problem is doing it by hand for every trade, forever, is brutal, which is why I do not, which is why the leak ran for 5 weeks. So we built the thing that does it for you. It is called Sentinel. It breaks down every trade you take, calls out the early exits and the emotional ones, and coaches the read. So a leak like mine gets caught in a day instead of running for 5 weeks before you notice. It is the same idea that made me money, the review just automatic, and pointed at your account instead of mine. Link is below if you want it. So let me bring it home, because this is the whole channel in one idea. Subjective trading won. Not because the fair value gap is magic, it is not, the data is clear. It won because a human reading context beat a fixed rule that cannot read anything. The setups are just vocabulary. Everyone arguing about which setup is best is arguing about words. The edge is the discretion. The take this, skip that, hold here, cut now. And discretion is a skill you build one way. Reps, then review. Watch the 2-hour lectures, not the clips. Take the trades on a small account for real. Then review every single one, because the trades teach you nothing until you do. That is it. That is the whole thing. Everything is in the free Discord. The full trade breakdown, the way I review, and the link to Sentinel if you want it pointed at your own account. I am not going to tell you to go trade futures. Most people should not. I am going to tell you the truth this channel keeps arriving at from completely different directions. There is no magic setup. There is only the read and the review. We test. You decide. And the next time someone sells you a setup with a 90% win rate, you already know the only question that matters. Okay, show me the account and show me the review.